Now, Goldman Sachs once called for reform of high-speed stock trading. Now it wants to get back into the game. Bloomberg News is reporting that Goldman has been hiring executives and investing in software trading infrastructure and its dark pool. Back in 2014, Goldman's president Gary Cohn called for reforms in the high-speed market. So, is the bank trying to level the playing field for its clients? Well, here with me to discuss this is the reporter who broke that story for us, Michael Moore, and also my co-host for the next hour, Mark Crumpton. So, Michael, why? It seems like an about-face by Goldman Sachs.
Well, they would make the case that you can have both. You can have reforms and also still be an active player in this business. But certainly, they were trying to get out ahead of some of the things surrounding dark pools last year, calling for some market reforms, and not much has changed. Not that much has changed over the last year, and so they're fallen maybe a little behind some of their competitors and want to revamp some of their technology and get back into this game.
You mentioned, Michael, that they're falling behind their competitors. Goldman is in the position now of having to play catch-up. The technological advances, will they allow Goldman to level the playing field?
That's their hope. There's two ways of looking at it here. The playing field in terms of the overall market, getting their clients to the market as fast as possible, having the best execution, and then leveling the playing field with their competitors. Goldman is the top equity trading bank by revenue, at least last quarter.
Yeah.
They fight it out quarter to quarter with Morgan Stanley. Those are the top two firms by far. But in this area, Goldman has slipped a little behind. They want to get back to number one in that.
So who are they recruiting? Are they hiring outside to beef this up within Goldman?
They are hiring. They hired a managing director from Morgan Stanley who's joining the firm later this year. We heard there are some more hires in the pipeline. And they're out there looking for, especially on the tech side.
Michael, Betty mentioned Mr. Cohn in that op-ed that he wrote in the Wall Street Journal last spring. He said that the market structure needed improvement because risks were, in his words, amplified by the dramatic increase in the speed of execution and trading communications. Is this now a question of improvements made to Goldman's satisfaction, or is it a question of clients telling Goldman, demanding Goldman, that they get back in the game?
I think it's a little bit of both. I mean, Goldman has a lot of quant fund clients. The quantitative hedge funds, they're clients of the prime brokerage, they're clients of other parts of the bank, and Goldman is saying we need to have the top-of-class technology to be able to service these funds in this business as well. So I think there is some demand from clients, like it or not, this is how the market's structured, and we need to be able to execute in that.